What's up, YouTubers, and what's up, traders? Tonight I'm just checking in, stopping by, just to discuss what's going on in cryptocurrency right now tonight and what's taking place in the market. As you can see, tonight's video is going to be centered around Bitcoin dominance and how it affects your portfolio when it goes up and when it goes down. And if you have stumbled across this video by mistake but you are interested in cryptocurrency, you can email me at klewis198724@gmail.com. That's KLEWIS198724@gmail.com. I offer cryptocurrency consultations, and I also offer a cryptocurrency mentorship program. And what I do, I just bring you up to speed, get you abreast to everything crypto. I get you interacting with crypto, transacting with crypto, teach you different investment strategies, how to choose which cryptocurrencies to invest in, all that good stuff, and a whole lot more. So if you're interested in cryptocurrency, email me at klewis198724@gmail.com. That's KLEWIS198724@gmail.com. And remember to give me your full name and phone number, and either myself or one of my associates will contact you, and we'll set up your consultation and or get you enrolled in the cryptocurrency mentorship program that I have going on. But I'm not going to get into all that tonight. Tonight we just want to talk some crypto, right? And look at this Bitcoin dominance and what we can expect from it and how it affects your portfolio when it goes up and when it goes down. So let's talk a little crypto. So here I'm going to start with CoinMarketCap, and we're going to take a look at your top 5 cryptos. Number 1, Bitcoin is up today at 5.4%, all the way up to $10,750. Coming in at number 2 is Ethereum, up 3.22%, up to $228.67. Coming in at number 3 is XRP, up 1.53%, up to 31 cents. Number 4 is Litecoin. Coming in, it's up at 0.92%, up to $89.44. Wow, it's a good price. And last but not least, Bitcoin Cash, the newbie's confusion, is up a whopping 9.52%, all the way up to $308. Let's take a look at your biggest gainers. Your biggest gainers for today is UNetwork, up 26.28%, all the way up to not even a penny yet. Coming in, your next biggest gainer is XMAX, up 22.63%, up to not even a penny yet. Number 3 is Monacoin, up 18.14%, up to $1.99. Let's see if we can get that push to a solid $2. Coming in at number 4 is 0x, up 17.54%, up to 25 cents. And last but not least, you have Icon, all the way up 17.45%, up to 37 cents. Now let's take a look at your biggest losers. Your biggest losers for the day. Number 1 is Komodo, down 6.14%, down to $1.27. Coming in at number 2 is Crypto.com chain. That name scares me a little bit. Down 5.95%, down to 6 pennies. Number 3 is Clippercoin, down 4.49%, down to just a penny. Number 4 is Dent, coming in at down 3.44%. Ooh, nowhere near a penny. And number 5, last but not least, Walton Chain, I have a bag, down 3.14%, down to $1.95. And let's take a look at your Bitcoin dominance charts. Let's dig right into this. I got it pulled up already. It's just some interesting things. I'm not subscribed to TradingView. I got it on Coinergy, but TradingView gives me a good clear number when I'm looking at these Fibonacci retracements, and just for educational purposes. But I'm gonna get that out of here for right now. I just want you all to look at traders. Take a look at right now, at present tense happening. Our Bitcoin dominance is at a level that has not been tested since. That incredible bull run back in December of 2017. You see here, we are right here retesting the same horizontal resistance level. And as you can see, back in 2017, what happened when we reached this level? Bitcoin dominance just imploded along with the price. So we are retesting that area right now as we speak, and we're gonna see what happens. I'm expecting a reversal in Bitcoin dominance, and for obvious reasons, I'll get into that in just a few seconds. You got a couple of different coinciding variables, and when you're trading, that's what you want to look for when you're looking for market sentiment. You want to look for coinciding variables, right? You just don't want to see one thing and go off of that instinct. You want things to coincide and give you a good feel of what's about to happen or what may happen in the next coming days and or weeks. When you're looking at Bitcoin dominance, this is the daily chart. For starters, this is the daily chart, Bitcoin dominance daily chart, calculated by TradingView. I can't get this on Coinigy. Coinigy is another charting website program that's out there for cryptocurrency traders. It has all the cryptocurrencies on here. TradingView does not, but TradingView does have equities and commodities on here, so TradingView is pretty good as well. But I'm in crypto heavily, also in gold, those commodities, and silver. But this is crypto and travel. This is not gold and silver and precious metals. But anyway, as you can see again, traders, we are testing a critical horizontal resistance. As I mentioned the last time, we had that huge bull market. We tested this area and we completely got rejected, and the price and everything corrected. So it's going to be interesting to see what happens here, traders, as we test this area of resistance. As you can see, we are starting to retrace a little bit. Let me zoom this. We are starting to retrace a little bit, but not a lot here as we test this area of resistance. We are starting to retrace a little, but not a lot. But as you can see also, I don't know if y'all are familiar with geometrical shapes, but we are in a rising wedge. You see this rising wedge here, and that is a bearish sign for price and Bitcoin dominance when you are in a rising wedge. Rising wedges usually indicate that a reversal is about to happen. And I also trade, as you can see, overall price, we're in this huge symmetrical triangle, which we came down and tested here, but we quickly bounced off this trend line and stayed above it since June. This is June of 2018. We have came nowhere near this bottom trend line, which is a good thing for the Bitcoin bag holders, because I mean Bitcoin dominance has been steadily increasing and remaining the same without retracing a lot. So that's a good thing. But I just want to point out, we are in this rising wedge, and rising wedges are usually a bearish signal that price may reverse. And I also you see these pink and blue lines that are on my chart. Those are moving averages, 13-day and 34-day moving averages, traders. And I use those just to get bullish and bearish crosses. As you can see, it happens about every time when the 13-day, which is the pink, crosses above the blue, which is the 34-day moving average. The price usually follows every time you get this cross. So that's a good kind of sentiment to use, especially when you're starting out and you're a new trader. You can use these moving averages to kind of get an idea of what's happening with the price. And also, traders, a rule of thumb when you're using moving averages, look how far the price has got extended from this moving average. And when the price gets extended from these moving averages like this, 9 times out of 10, it has to come back. It takes a pull back at least to these moving averages. So we're in a rising wedge for one. That's bearish, usually indicates a price reversal. We're extended from this 13-day moving averages, from this 13-day moving average, which typically means we usually have a pullback to the to at least the 13-day moving average. Just look at history, how we got extended from this 13 moving average here, and we had a pullback all the way through and below, and we even broke the 34-day moving average. Again, see, then we quickly corrected, And so do you see how we follow closely with this 13-day moving average? And every time we get extended, we have a pull back to this 13-day moving average. And again, we are extended again. So I'm expecting for history to repeat itself. And we're going to have a pullback. And again, and also number 3, we're at this crucial point of resistance. You know, this is another. So that's 3 coinciding variables that we have right now, traders. We are overextended from the 13-day moving average, which every time you see when you go back in history, when we get overextended from this 13-day moving average, we have a pullback towards it. Again, happen right here. So I'm expecting the same thing to happen right here. And you can see as we begin this candle here, we are kind of starting to pull back from the 13. I apologize for that ad thing that keep popping up. From this 13-day moving average. And number 3, we are in a rising wedge, which is a bearish signal, meaning that price can reverse to the downside. And this is not price. This is Bitcoin dominance, traders. So I'm going to explain Bitcoin dominance in a second, but I just want to go to my 4th and final coinciding variable real quick. Look here, we have what we call bearish divergence. As you can see right here, if you see my my mouse right here at the bottom of the screen, an RSI. RSI is called the relative strength index, and that just gives you momentum with price swings, and it denotes oversold and overbought areas. And what I mean by oversold, when we're oversold, traders, we are down here. When we're oversold, and as you can see, every time we get oversold, the price, well, this is Bitcoin dominance, rises back up. And this here is what you would call overbought. We are overcooked. I mean, it's hot. Do not touch it, family. Do not touch it, traders. When we are overbought, it's hot. Do not touch it. Just think of a hot stove or something when you see overbought conditions on the RSI. And again, traders, we are overbought. And as you can see, when we are overbought, the indicators, the oscillators, this is an oscillator, it resets. And it comes back down to in the RSI. And this purple area of the RSI just denotes 40% to 70%. When you are inside that range, you are in pretty much a neutral territory. And you can use that to see how far you have to go. You can go to the downside and you can go to the upside, traders. So that's just a little bit on the RSI. And it also denotes divergence and convergence on the RSI. And right now, I'm sorry, divergence. It denotes divergence on the RSI. And right now we have bearish divergence. And every time I say bearish, if you're not familiar with the terms bearish and bullish, bearish just means the price is coming down, and bullish means the price is going up. So right now we have a bearish divergence on the RSI, and this is how you can see that. You see here at this point, it lines up at this very peak where we were overcooked and overbought on the RSI. We made a new high on the chart, right? This was a high on the chart. And then as you can see here, let me get my handy dandy trend line up so I can draw this real quick. All right. Sorry, I'll change the color so you don't get confused. Change it to a handy dandy white so you can easily see it. Handy dandy white, Blue's Clues. I don't know why this is on my mind. Change up the thickness so you can see this before I explain it. All right, traders, here we go. All right, here on the RSI, we're overbought, right? And we made a high here, and then we made a higher high on the chart here. But as you can see on the RSI, we are making a lower high. So we made a higher high here on the chart, but a lower high here on the RSI. That's a signal that this move up is running out of steam, because we're making a higher high on the chart and a lower high on the RSI. That's called bearish divergence, and that lets you know that this move up is running out of steam. So that's how many coinciding variables, family? Traders, is that 5? We are facing crucial horizontal resistance here. That's number 1. We are in a rising wedge. That's number 2. We are overextended on from the 13-day moving average. That's number 3. Horizontal resistance, rising wedge, overextended from the 13-day moving average, which you see every time we get overextended, we correct. Overextended here, we correct. We got overextended here, we corrected back down. We are overextended again, so I'm expecting another correction. So that's 3. Number 4, we have bearish divergence on the RSI. We're making a higher high here and a lower high here. From here to here, this high is lower than the previous high, and this high is higher than its previous high. So on the RSI, when you make a high that is lower than the previous high, but on the actual chart you are making a high that is higher than the previous high, that's called bearish divergence, and that lets you know that this move up is running out. So let me briefly explain what BTC, Bitcoin dominance, mean. When Bitcoin dominance is high, traders, that means that all the money is flowing into Bitcoin, and they're flowing out of altcoins. If you're new to cryptocurrency, altcoins are alternative coins. That's your Ethereum, your XRP, your Binance coin, your Litecoin. All those are considered altcoins. And so right now, with Bitcoin dominance sitting at 69.28%, that's very high. All the money is in Bitcoin. And when this Bitcoin dominance reverses and it goes lower, money starts to flow back into altcoins. And that's a trading strategy that I teach with the consultation and the mentorship program. You can chart. I teach you how to chart cryptocurrency, period. Then I also teach you how to chart Bitcoin dominance to get a sentiment of when dominance is going up. You kind of want to maybe throw some money into Bitcoin, and when dominance is pulling back, you can throw some money into altcoins. And then you can chart the altcoins to see which ones look good and have bullish sentiment, which means that the prices are going up. So you don't expect anything when you trade. You just set up, you just choose your setup and find your point of entry, and you just pretty much pay a price to enter at that point and see if it pans out. Then I also teach you how to protect that money, not just throw it in a trade and just continue to lose it. I teach you another method of how to minimize your risk as well. So you have 4 coinciding variables, and I'm pretty sure more expert traders are looking at something saying that, oh, I can't believe that he missed this. But yeah, traders, that's 4 coinciding variables that Bitcoin dominance may see a reversal. And we just see how it plays out. And then let's take a look at actual Bitcoin, guys. Let's take a look at the price of Bitcoin and see exactly what's going on with Bitcoin. And this is when this chart decides to pull up. This is Coinigy right here. This is what I usually use to chart all of my cryptocurrencies. I use TradingView to chart Bitcoin dominance, but because you can't on Coinigy. And I'm gonna have a Fibonacci retracement up here now. I'll discuss Fibonacci in a second, but yeah, trade. This is the 4-hour chart. Bitcoin paired to USD. 4-hour chart. 240 means it's 4-hour chart. On GDAX. GDAX is now named Coinbase Pro. That's where you can go and you can buy your cryptocurrency like Bitcoin, Litecoin, XRP, Ethereum, and several others. But yeah, this is what we're seeing. We're also seeing a little retracement on the price of Bitcoin, and we were in the opposite. As price fell, we were in a falling wedge, which I drew this yesterday. And see, this is again, you look for coinciding variables, family. You see here I drew this trend line here, and I knew that in order for Bitcoin to stay in any kind of an uptrend, we have to stay above this trend line. If we broke this trend line, that means we were going to continue to bleed, and our next area was probably going to be around about, maybe around about, I'd say roughly 9K-ish, somewhere in that area if we broke this trend line. And I also noted that we were in a falling wedge, rising wedge, right? Rising wedge, a rising wedge. Denotes that that's a bearish sentiment, meaning that you can expect a price reversal. A falling wedge, I'm sorry, I can't do the falling wedge, but a falling wedge, as you see here, denote that's a bullish sentiment, meaning that the price will reverse, and that's exactly what happened. We bounced all the way down to this textbook. This was a textbook bounce. We bounced all the way to this trend line, correct, and we bounced off in that falling wedge, and price reversed as a falling wedge denotes a bullish sentiment. So we bounced right off this trend line in this falling wedge, and prices reversed and came out of it. Now when I'm looking at traders, the same thing. The pink is the 13-day moving average. The blue is the 34-day moving average, correct? And so traders, now what I'm looking at to kind of see if price is gonna continue up, well, we have to start to close above this 13-day moving average and make our way back up to this 34. So I've got my eye to see if we can do that. But here, like I said, it's textbook bounce. So what you would have done right here in this area between 10,000, pretty much 10,000 to 10,200, you would have placed a buy order. And you see these coinciding variables adding up, correct? And so at that point, you would have just entered in and bought at this area because you knew we good chance we were going to stay above that trend line. We're in a falling wedge, which is a bullish, meaning that price will reverse. So you would have bought in at that point, and you would have set what I call a stop loss. That's how you minimize your risk. You would have set a stop loss. I'm not going to get into all of it, but you can do your own research if you would like. You would have set a stop loss so that way you could have minimized your risk in this area and bet on the fact that we would have had a price reversal, and you could have got you a little gain here and exited if that's what you like. If that's what you would have done, or you could have been right. You could have rolled it out. And from here to this trend line up to here, you could have nabbed a 10.73% profit. Just that easy. It's not really, I can't say just that easy because it's not easy. It takes a lot when you trade. You have to learn the trade, the psychologies that come along with trading. I can't say not that easy because it's not that easy, but it's not that confusing either, you know. So, but yeah, you could have popped in right here, grabbed 10% of what you invested or what you bought in, and you could have exited. And then you could just wait for something else to actually pan out. But yeah, so you look for areas of confluence where you have coinciding variables. And so here, what we're doing, let's take a look at the RSI to see if we have any divergence going on here, family. So what we got here, we are making another high here. Let's see. This high is, the last high was here. So no, both of them are going down. So we can't really see any sentiment and price reversal on the RSI, but we are sitting here at 43%, which we still have a lot more. We have a lot of room to go down if we choose to go down. And we also, I mean, of course, we have a lot of room to the upside, but just take a look at how we close with this 13-day moving average. And let's look at the fib level. Let's look at the fib levels. We have entered the golden zone. The golden zone is a zone where price tends to reverse. So let me redraw this fib. Actually, let me get rid of this fib. Let's redraw this. And I discussed that head and shoulders pattern that you see here. Left shoulder, right shoulder, head. Take a look at my last video. It has a thumbnail, Bitcoin crashing. If you want to get into this head and shoulders pattern and this neckline, which I successfully called prior. Take a look at my last video if you want to get into head and shoulders. I'm not going to discuss that on this video. But yeah, so let me set up a new fib. We are still in an uptrend, mainly because we did not break that trend line and set a lower low. If we had broke that trend line and made a lower low, we would be coming out of that uptrend. But since we did not, we are still in the uptrend. And so when you set your Fibonacci retracement tool, you want to go from your last swing high to your swing low. So I'm going to click on the Fibonacci retracement. I'm going to set it here at the wick, right here at this top wick. And I'm going to trace it down to the bottom wick from your swing high, swing low. And so there you have your fib. There you have your Fibonacci set up. And you see we bounced right here from the bottom of this fib. I mean, textbook bounce, traders, textbook. And now you see this golden zone. We're trying to enter that golden zone. That's the moment. That's the price where price usually reverses. But we are having a tough time getting into that golden zone, traders. And so we can get that reversal. So I mean, more sentiment that we may be going down in price with Bitcoin, and you have all that bearish confluence on the Bitcoin dominance. And like I was saying, when Bitcoin dominance decrease, the price of Bitcoin decreases because people are pulling out. And so now, and look again, traders, look at another coinciding variable here. Look here, traders. Remember I was saying that the 13 and 34 day moving average, 13-day moving average is this pink, and the 34 is the blue line. You see it, the same thing, and it's just funny how the 13-day moving average is coinciding with this golden zone, which is called the golden retrace. It is coinciding right there in that golden zone, and that's just another coinciding variable coinciding variable stating that we need to get above this 13-day moving average to see any kind of bullish sentiment. And when we start to close above the 13-day moving average, which is right here, we'll also be in that golden retrace, that golden zone, which is known for the price to retrace. So more coinciding variables. And look at the 34 day, this blue line. That's right at the top of the golden zone. So when price can start to close back above this 13-day moving average, we will be in the golden zone where retracement is known to happen. And when we reach and start to close above this 34-day moving average, we will be continuing to reverse probably from coming down here as we have a little sell-off. Price will continue to go up, and we will be entering the 50%, known as the 50% retrace. These field has levels. I can denote the levels better here on the Bitcoin dominance. Because that's why I like TradingView as well, because for beginners, the Fibonacci levels are displayed. So let me feel here from your swing, and we're in the uptrend. As you can see, we're in the uptrend. So you want to go from your last high to your last low, which our last high was here back in 2017 on Bitcoin dominance. So we will use that area to fib from to this low here. So let's find Fibonacci fib retracement. And we will start here from this high. Extend that way down to that low point right there. So let me make this big. And now you can see the levels of the 236, the 382. The 382 denotes the beginning of the golden zone. The 50% retrace, so you can say the 0.5 denotes this when you're exiting the golden retrace into the next level of that field, and so on. 618, the 786, and that is the 786. All right, and so forth. So, and you can see here we are overextended again. That's right, family. I do have to say one thing though. If Bitcoin dominance does decide to break this resistance, pack your bags, because we are going our next level of resistance where we can even see any kind of pressure to stop going up is going to be around about 75%. 75% Bitcoin dominance means that we may see $17,000 Bitcoin, $17,000 Bitcoin, from $15,000 to $17,000 Bitcoin. If Bitcoin does decide to break this, so I'm keeping my eye on this. We do have the bearish sentiment, rising wedge extended from the 13-day moving average, a heavy area of resistance, bearish divergence. But if this is a bull market where the bearish indicators have no effect on the price and we just plow through this, be on the lookout for Bitcoin price to rise significantly. So, but yeah, I just wanted to note the fib levels here, the fib levels here, and so let's go back to CoinMarketCap, or we can let's go back to Coinigy, where we can look at Bitcoin really quick, and you can see how we are coming out of here. We want to test the 382, which denotes this golden zone area, but we have to, like I said again, traders, we have to start to close above this 13-day moving average, which is all coincides with this golden retrace zone. And if we want to get even more bullish, we have to get above this 13-day, which coincides with the 0.5 for the 50% retrace. So there you have it, traders. I'm not going to waste too much more of your time. And again, if you are interested in cryptocurrency and you just stumbled across this video, remember to email me at klewis198724@gmail.com and with your full name and phone number, so I myself can reach out to you, or one of my associates can reach out to you, and we can get your cryptocurrency consultation started and or mentorship program. And remember, follow me on Facebook at Crypto and Travel, and follow me on Instagram at Crypto and Travel as well, so you can stay up abreast of everything, what's going on. And on Facebook, you can see my whole consultation program and mentorship program with everything that it offers. You can also see the very affordable price of each. And so, yeah, that's it, traders. I'm out. It's been 30 minutes. I don't want to hold you up too much longer. But now, hopefully, you understand Bitcoin dominance and how it can affect your portfolio. When Bitcoin dominance rise, more money is flowing into Bitcoin. So you probably want to stay put if you are in Bitcoin. But if you see Bitcoin dominance falling off a cliff, you may want to go into altcoins and or some stable coins to protect your investment. If you made profit, put it all into stable coins. But if you want to take another calculated risk, put it into some altcoins that look pretty good. And again, I'm out. This is my platform on YouTube, Crypto and Travel, where I discuss cryptocurrency and everything travel. Be on the lookout for my next video. I'm going to be putting out some travel deals that I got that you can also take advantage of by hitting me at that same email, klewis198724@gmail.com. That's KLEWIS198724@gmail.com. So that way we can crypto and travel together. We can take some of these profits and book some trips and see some of this world, all off the strength of cryptocurrency. Peace. I'm out, family. You all have a good day, and I hope to see you next time. Subscribe to this channel if you like this info and like to see more info in this same nature. All right, family. I'm out. Y'all have a good one.